afternoon, everyone. Welcome to today's event entitled Investment Strategies in Bear Months, brought to you by Rampver Financials in partnership with PhilEquity Management Inc. This is Kim Sayo from Rampver Financials, and I will be your host for today's event. Kamusta po kayo? I hope everyone's keeping safe and healthy. And we all know that we have officially entered the Happy Bear Months. Magsisimula na namang patugtugin ng mga Christmas songs at magsusulputan na naman ang mga panindang parol at puto bumbong. In investments naman, sabi nila na kapag bear months, nagiging bullish na ang stock market. At dahil dito, maraming nagiging interesadong maglagay ng pera. However, it is also during this time when many people fail to effectively invest their money. Kasi nga, either nagiging too greedy sila or on the extremes, masyado din namang takot. What about you? Are you also one of those contemplating to invest? And alam ba ninyo, paano ang tamang way? Ready na ba tayo to hear and take the higher road on our investment strategies? And in today's special event, we're blessed kasi makakasama po natin ang isa sa pinakamagagaling na fund management company sa larangan ng mutual fund investments. And this is no other than PhilEquity Management Inc. or PEMI. So PhilEquity Management Inc. is an investment management company established in 1994 for the purpose of achieving consistent and long-term above-average returns for its investors. The fund's long-standing track record is a testament to PEMI's unique investment process, which combines top-down global outlook with bottom-up security analysis and risk management. So as a result of consistent returns and strong performance, PhilEquity funds are the must-haves for those looking for alternative investments. And so, to give you an idea, we will start the event with the recommended funds of PhilEquity Management Inc. This is to be discussed by Ms. Jenalyn Baal, followed by a market update from PhilEquity's Equities Portfolio Manager, Mr. Miguel Agarao. And last but not the least, our President and CEO, Mr. Rex Mendoza, who will be sharing with us strategies in investing during these incoming bear months. And of course, much like our previous events, there will also be a Q&A session to follow immediately after the presentations. Here, we would like to encourage everyone to drop your questions in the Q&A box found below your screens so we can answer them live later on. But before we introduce our speakers, may we invite you to subscribe to our YouTube and TikTok channels. These are the official social media accounts of Rampver Financials, where you would be able to find valuable content that will help you in your financial journey. And we hope to see you in our growing RFF community soon. At syempre mga ka-RFF, beware of these fake accounts from Facebook and TikTok. So just follow our official Facebook, YouTube, and TikTok accounts. And before we formally start, we have just a few house rules. First is recording of this webinar or posting a live stream is strictly prohibited. Maximize the Zoom group chat if you have any comments or questions. Enjoy the session, learn, and execute. So to formally start this event, allow me to introduce to you our first speaker. So for our first speaker, she's a senior investment officer at PhilEquity Management Inc. and a financial literacy advocate. Over the years, she has addressed over thousands of prospective mutual fund investors through regular seminars to OFWs, college students, and corporate workers. With more than 10 years of experience in stock trading, she has assisted the not-so-financially savvy investors as an SEC-certified investment solicitor and certified securities representative. Friends, let's all welcome Ms. Jenalyn Baal. Hi, Jenna. Good afternoon.
Hi, Kim. Thank you for that wonderful introduction. And we also want to thank Rampver for organizing this amazing event. So a pleasant good afternoon to everyone and to all our attendees. So this afternoon, I'm very excited to share with you about who PhilEquity Management is and our family of funds. So let me just share my screen. Okay, so just to confirm, Kim, can you see my screen?
Yeah, it's clear. You can start. Thanks, Jenna.
Thank you, Kim. So again, a pleasant good afternoon to everyone. So today, let's start first by answering the question who PhilEquity Management is. So first of all, PhilEquity Management, we started way back in 1994. So we're actually one of the pioneers in terms of mutual fund here in the Philippines. So we're over 28 years of experience already in the market. So as of current, we have a total of 7 funds. So two of them are actually a bond market and five of them is invested purely into equity market. So as of current, we do have a total of AUM, 35 billion, and we do have around 66,000 investors and still counting. Now, the next question is that, who are the dedicated fund manager behind PhilEquity? All right, so let's start first with our Chief Investment Officer, none other than Mr. Wilson C. Okay, he's considered also the Warren Buffett of the Philippines. He's the co-founder and CIO of PhilEquity with over 45 years of experience. So he is the fund manager for some of our equity funds. And here with me today is also Mr. Miguel Agarao, which is also the fund manager in some of our equity funds with over 10 years of experience in the market. Okay, for the bond market, we do have a different fund manager. So that's Mr. Timothy C., which is also the president of Vantage Financial Corp and a fund manager for our two bonds. So for PhilEquity, we do have two bonds. So first is we have the peso, then we also have the dollar denominated bond. And last but not the least will be Mr. Jerome Gonzalez, which is the research head of PhilEquity Management with over 20 plus years of experience also in the industry. Okay, so these are some awards that we have from 1994 up to the present. And some of you might question why choose PhilEquity and not other mutual funds. So these are some of the reasons behind. So first of all, we're the only mutual fund in the country with the same fund manager since inception of the 1994. So with that, since we do have the same fund manager, you can expect that we have the same results year after year. And they have extensive experience of senior management. So these around 40 plus years of experience in the industry. Then our fund managers are also invested. So this is the big difference that we have with other mutual fund because our fund managers are also invested to the fund itself. So they have the majority stake in the company. So they make sure that they have good rates because their money is also at stake. And even though all our funds are locally traded, they still have a global outlook. Okay, so these are the funds of PhilEquity. So again, we do have two bond fund, 1 peso, and we'll have dollar denominated bond fund. And we have 5 equity funds. So if you would notice, no, we do have two index funds. So just to discuss briefly our two index fund. First is we have the PhilEquity PSE Index Fund. This fund mirrors the PSEI, the top 30 large companies in the Philippines, while the MSCI Philippines Index Fund is also an index tracking fund that mirrors the MXPH. This is the benchmark provided by MSCI to measure the performance of the Philippine economy or the Philippines globally. So the distinct about these two index funds is that even though these are index tracking fund, they still have a fund manager who actively trades for this fund. But this afternoon, we will be focusing on our top three funds. So namely, we do have the Dividend Yield Fund, we have the PhilEquity Fund, and of course, we do have our PhilEquity Alpha 1 Fund. Okay, so let's start first with PhilEquity Dividend Yield Fund. So from the term itself, dividend, this fund focuses on dividend-paying companies. So these are actively traded every day by our fund manager. This is over 40 plus companies. So who are the companies invested to this fund? So you can see here our top 10 companies. We do have a PLDT, we have Meralco, we have Globe, Nickel, SM, and so on and so forth. So even though that market is down or a market is at correction, this will continuously gives out dividends. So this is our resilient and also defensive fund. So just to give you the dividends will not be reinvested or paid out to the investor, but rather reinvested to the fund itself. So this is as of July 29. You can also have our fund fact sheet, which we upload in our website on a monthly basis. So you can see here that the return since inception of 2014 up to the present, it's now around 25.41%. Now, if you would ask what's the return on an average or annual, so here, average annual return is around 2.71%. Now, in order for us to appreciate it more, let's put it in graph. Okay, so way back in 2014, what if you put your 100,000 way back 2014 as of July 29, now it's around 125,411. Okay, so next fund that we have is our PhilEquity Alpha 1 fund. So this fund is our aggressive fund. So the fund aims to produce superior returns over long term. So our fund manager specially curated the companies or the stocks to buy for this fund, which have strong growth potentials. So who are the companies here in PhilEquity Alpha 1? So you can see here as well in our top 10 holdings, we have Nickel Asia. We also have PLDT, SM Prime, BDO, Ayala Land, and so on and so forth. So this is as of July 29. It's actually below par. But you can see here as well, it's a bit negative as of July 29, around 0.50 since launch. This was actually launched way back 2019. So December of 2019, pre-pandemic. And the return is actually around 0.19%. Now, this is what we call paper loss. So if you don't redeem it yet, so these are just paper loss, but eventually we know that market will recover. So if you have your 100,000, it's a bit lost as around 99,500. Okay, and our favorite fund. Okay, so I think most of you are invested also into this fund. PhilEquity Fund is our flagship fund. The main purpose of this fund is to outperform the PSEI, its benchmark, which composed of, again, the top 30 large companies in the Philippines. So this is actively traded by our fund manager with over 50 stocks. So who are the companies for this fund? So again, you can see here the top 10 holdings. We do have SM, we have BDO, we have ICT, BPI, and so on and so forth. So ito yung fund natin that started way back in 1994. So we started this fund at 1 peso price NAV. Now it's ranging around 31 to 32 pesos already. Now for the return, how is the return of this fund? PEFI. So since inception from 94 up to the present, it gives you around 2,905% gain. On an average, it will give you around 12.92% per annum. So again, in order for us to appreciate it better, let's look at in a graph format. So if you have your 100,000 way back in 1994, now it's around 3 million already. So imagine that it also includes all the downfall and bear markets from 94 up to the present. And you haven't even added on this one, but it still give you a positive return of 3 million. Okay, so over the past 28 years, we did outperform the PSEI 22 times already. And just to give you some of the markets we're experiencing when the market is down or bear market, because if it's a bull market, everyone is a winner. Everyone can just outperform the PSEI. But how does our fund perform during the bear market or when the market is down? So let's start first. Year 1997, Asian financial crisis. So our economy is down by negative 41%, while our fund, PhilEquity Fund, this is also known as PEFI, it's down by negative 5.2%. Then following that is we have the year 2000 Arab impeachment trial. And aside from that is we have, if you would still remember, the Y2K bubble or the love virus. And we also have the ASG hostage takings and MILF insurgencies. So the economy is down by negative 30.3, but look at our fund. Even though that the market is down, PhilEquity Fund still gives around 6.8%. So meaning your capital is still preserved plus a positive gain of 6.8%. Then following that year is the 2001, if you would still remember, the 9/11 terrorist attack. And aside from that is we have the Estrada impeachment. So economy is down by negative 21.8%, but our fund still gives you again a positive return of 2.9%. So again, your capital is preserved plus a positive gain even though the market is down. And we have our 2008 US housing bubble. So here the economy is down by negative 48.3, and our fund is also down, but it's just down by negative 40.7. And last but not the least, of course, our recent COVID-19 pandemic, but this still continues because we're still under the pandemic. The PSEI, this is as of February of this year, gives out around 32%, while our fund gives out around 1.62% gain. So these are some of the years that even though that market is down, we're still outperforming the PSEI. Okay, so these are the summary of our funds. So for all our peso denominated funds, the initial investment is just 1,000 pesos. Now for the dollar, initial investment is just $500. And for the additional investment, the minimum additional investment for our peso denominated bonds, for peso denominated funds is 500 pesos, and for our dollar it's just $100. Now for the exit fee, this is across all our funds. Our holding period is just 30 days, is just 90 days or 3 months. So if you redeem less than the holding period of 90 days, that's the time that you have a 1% charge. Okay, so in summary, who are the top 3 PhilEquity funds? So again, let's discuss PhilEquity Dividend Yield Fund. So this is our resilient and defensive fund. Then we also have PhilEquity Alpha 1 Fund. This is our aggressive fund. And last but not the least, of course, we do have PhilEquity Fund, which is our flagship. This is somewhere in between PhilEquity Dividend Yield Fund and PhilEquity Alpha 1 Fund. Okay, and some words of wisdom from our fund manager. Okay, and that ends my presentation. Thank you and enjoy the rest of the program.
Thank you very much for the very informative discussion, Jenna. Oh, grabe. Talagang magaganda pa lang mga funds na ino-offer ni PhilEquity. Lalo na yung top 3, no? So we have the PhilEquity Alpha 1 Fund, PhilEquity Dividend Yield Fund, and PhilEquity Fund. And I think many more pa na marami pang mga funds available si PhilEquity. And again, thank you very much, Jenna. So moving on, let's now proceed to our second speaker. So for our next speaker, with more than 10 years of experience in finance, Miguel is currently the Vice President of PhilEquity Management and helps manage the different funds under PhilEquity. Miguel started his career as an analyst for a hedge fund covering Asian markets. Then, as an analyst at Wealth Securities, he utilized financial statements and different models to find non-index with large growth potential. He is also responsible in crafting and presenting PhilEquity strategy and market outlook to clients and investors. Miguel finished high school at Philippine Science High School and graduated cum laude in Business Administration at the University of the Philippines, Diliman. Ladies and gentlemen, let's all welcome PhilEquity's Equities Portfolio Manager, Mr. Miguel Agarao. Hi, Miguel. Good afternoon.
Good afternoon, Kim. Thanks for having us.
Sure.
All right. Good afternoon, everyone. Thank you for attending this event and thank you for inviting us. It's always our pleasure to join events hosted by Mr. Rex Mendoza. He's been a friend of our firm and friend of our founder for quite some time now. So before I start, there you are. I will share my screen. Okay, the problem with presenting in the past 2 years is my presentation, say 1 month ago, can be very different from my presentation 1 month after, especially during the start of COVID when a lot of things change. But for this particular cycle, the title of my presentation is the R word. And R could stand for many things, but typically, I would start my presentation with the different factors that will move the stock market. Now, in 2020 and 2021, every presentation was about COVID. And you can imagine by early 2021, people were tired of hearing about COVID, but it still mattered then. What I want to say is that for this particular presentation, we're no longer going to talk about COVID. In my presentation in January this year, that was my first presentation where I said COVID will no longer be a major driver for the stock market moving forward. It may drive our lifestyle, our behavior, and well, I guess if you live in China where they believe in zero COVID, well, then it'll affect you there. But for most parts of the world, including the Philippines, it will no longer affect the market. If you noticed, from 2020 up till January 2022, the corrections caused by COVID got shallower and shorter in duration. So you had the 20+% correction lasting months, and then later it became 15, lasting only 6 weeks, so on and so forth, until the January correction was just like 4%, lasting like less than 2 weeks. So after that, I don't think COVID is gonna matter anymore as far as the stock market is concerned. Now, the bad news is a lot of other things will now matter to the stock market. So R can stand for inflation rate, R can stand for interest rates, R can also stand for recession risk. So these are the things I want to focus on today. I'm going to show you a little bit of the others also. But I just want to focus on these four main things as these are what will drive the market moving forward. So a lot of people have been asking, are we going to have a recession? Now, um, the way to answer that, there are many ways to answer it, but I want to show you economic data. Now, what a recession means is growth turns negative. It means the economy contracts from, say, the previous year. And if you look at our first quarter growth, it's positive 8%, not negative. Although, well, inflation's not yet there, so I expect that to go down in 2Q, 3Q, 4Q. But still, GDP could still end up at 6% for 2022. Even if it goes down to 5, that's still positive again, not a recession. OFW remittances already went back to pre-pandemic levels last year. They did slow down this year though, only up to 1.5%. Now, even though the economy is already back to pre-COVID levels, even though remittances are back to pre-COVID levels, even though some companies are actually above pre-COVID earnings already, I want to show you that the recovery has been quite uneven. Yeah, so government obviously did this recovered faster. BPOs also did. Education, yeah, that's getting back on its feet. Finance, that was largely unaffected anyway. But if you look at this right-hand side of the chart, so this is data from ADB, you see the sectors which employ a significant amount of people by headcount. These are the ones which are not yet back to pre-COVID levels. In fact, they're down between 30 to 40% of what they were pre-COVID. So like your restaurants, tourism, public transportation. So yeah, these are the ones which are still very, very far from where they used to be. Arguably, tourism is recovering, and so are the restaurant sector. However, just note that there have been permanent closures in both industries, which brings us to inflation. So this is what's dragging down our growth, and I want to highlight a number of things here. Number one, this is your headline inflation, and look at how it's been fairly stable and even after the Ukraine war, it started to move up. And why did that happen? Number one, because food prices were practically flat and then they moved up significantly. Depending on what you buy, your inflation could be like 30, 40% if you're buying, say, a lot of veggies or for some time chicken and fish. Um, wait, there you go. The other thing I want to direct you to is, can you hold on? There, here we're back. Okay, the other thing I want to direct you to is this part. So you see, for transportation, inflation used to be below 10%, and now it's moved up to about 17. It's probably close to 20%. This includes the 2 peso fare hike already for public utility vehicles, but note that I think the PUVs are asking for another 2 pesos. On top of that, taxis are asking for a higher flag down rate, so on and so forth. So this one can go above 20% by year end if all those fare hikes are actually approved. So that's what's really driving your inflation, food and transportation. Now, food and transportation both need oil because you've got to move the food, right, from farm to market to us. Transportation, you need gasoline, unless you're like riding on a horse or something. And if you look at how much oil prices have gone up, they're down about 20% from where they used to be, but they're still up like 40% from the lows you saw in 2021, which is again very significant, which is why you see gasoline prices still up very much this year, even though you've probably saw some rollbacks in the past few weeks, except this week. Now, this, depending on who you are, this is either really good news or really bad news. If there are OFWs listening now, this is wonderful news for you. If you're here though and not benefiting from OFW remittances or if you import, this is very painful. This is a chart of the Philippine peso. It broke its record low of 56.50 today. It hit an intraday low of 56.90. I don't know where it closed, maybe 56.80, 83 before I started this presentation. So the peso has weakened significantly. And because the Philippines is a net importer of goods, this can actually feed into your inflation figure. And I just want to show you a 20-year chart. You see here, era political crisis, fiscal crisis, hello Garci. All these previous lows of the peso, these were all broken today. This is now the record weakest point for the peso. And another reason behind that is we've started importing more. I don't know if you noticed, but in 2020, when everything was on lockdown, you take a look here, the peso was pretty strong, right? Well, that's because no one was importing anything because no one was buying anything except groceries, right? But as the economy reopened and we started buying more, going out more, the import bill went up, and we now have a record trade deficit in May, and I think June saw also another record again. Now, part of this is dollar strength. Part of it, though, is also what I showed you, country-specific factors which cause the peso to weaken, like a record break, a record trade deficit. And once upon a time, maybe in April this year, the peso was maybe one of the better performing currencies. But as you know, we started importing more and policies changed. The peso is now the third worst performing currency in Asia, down more than 10% year to date. For OFWs, that means what you send back will give your families 10% more in peso terms, or you can send back 10% less and they'll get the same amount. Now you're all aware of this. Our debt level is at 13 trillion. It's gone up 50 plus percent because of COVID. This was inherited by the new government, so that's going to be a problem for them. But just to summarize that part, we have exceeded pre-COVID levels of GDP. However, scars remain, such as mounting debt, permanent business closures, job losses, depleted household savings. And unfortunately, the new factor which is affecting our market is the sudden and sharp peso depreciation. So without going into details, what I can tell you is statistically, there is no situation where the peso weakens significantly and the market goes up. So I've looked at 30 years of data. There's none. So are we going to have a recession? Short answer, for the Philippines, extremely unlikely. Okay? But I want to highlight that Europe is very likely in a recession now. China is having a sharp slowdown. Now, let's see if the US enters a recession. Now, if those areas, those regions, those countries have a deep or prolonged recession, I doubt the Philippines will have a recession. However, we are going to have a slowdown. And that slowdown may be bad enough that it will feel like a recession, even though technically it is not a recession. So, short answer, nope, we're not going to have a recession. But if the world enters a recession, our slowdown will be quite painful. Which brings us to rising interest rates. So, because your inflation here is like 6+%, it's already so painful. I want to show you the US. Inflation in the US is 9%. Inflation in Europe is 10. Inflation in the UK is like maybe 12%, probably gonna hit close to 20 by year end. So the inflation problem is actually much worse abroad than here. Okay, I actually have a friend who lives in Germany, and we were comparing the per kilowatt hour or per megawatt hour charging for the electricity bill. And I can tell you on his October, kasi in Europe, it's a contracted renewal, it's not a per month thing. So when he renews his contract on October, his electricity rate will be about 6 times higher than the Philippine per kilowatt hour rate. So that's how much more expensive it is in Europe. So I'm not saying 6%. I'm saying if you pay 10 pesos per kilowatt hour here, it's paying like 60 pesos equivalent in Germany. It's that bad. It's that bad there. Fortunately, though, oil prices have fallen. That's why diesel's not close to 100 anymore. It's like 70 plus, so that's great. I just feel bad for people like me who bought diesel cars because it was cheaper than gasoline. Who would have thought this would happen? Now, if you read the newspapers, many economists have said that inflation has not yet peaked. Okay, here at PhilEquity, we are making the assertion that inflation peaks in the third quarter. The only question is it July or August? And as I showed you here, it seems oil has peaked. But how about other agricultural commodities? I want to show you sugar. Diba, we have a sugar crisis, so really high sugar prices here. What I'm showing you here are international sugar prices, and they haven't moved up. They're just moving sideways. So the high sugar prices you see in the Philippines are really a Philippine-only problem. I think you know what I mean when I say that, but yeah, I just don't want to say it out loud. But here's the chart of international sugar prices, no spike. If you look at corn, it's back to pre-war levels already. If you look at soybean, it's down 20% from its high. You look at wheat, this is used a lot for instant noodles and cookies. It's down 40% from its high. It's back to pre-war prices already. If you look at palm oil, both for cooking oil, cookies, and other desserts, it's down 55% from its peak. It's below the levels when Indonesia had the short-term ban on exports. It's below the peak after the Ukraine war. It's actually below its level that it started the year. So, this is very good for inflation. So just by looking at the charts, even oil, it looks like inflation has peaked. But, the numbers you see kasi on the newspaper, CPI, inflation, these have a lag time of about 2 months. So you're going to see the impact of this closer to the Christmas season, which is great. So at least when we do our Christmas shopping, prices will be lower, right? So this is what gives us confidence to say that inflation has peaked already, or if it hasn't, it peaks this month. Now, there was a debate last year between economists where economists and central bankers, including the US Fed, said that inflation would be transitory or temporary. Some people said it would be persistent. Now, clearly, from what I showed you, inflation was persistent. So central banks, including the Fed, those who got it wrong, had to act accordingly. So the Fed raised interest rates aggressively. It's now at 2.5%. It's the largest rate hike since 1994. 2.5% may look low, but US interest rates came from 0.25%. So you can imagine in terms of when mortgages, how much interest they pay per month, that has probably gone up maybe 40, 50% in the past 9 months. So it's tough. interest rates have gone up a lot there. So I just want to show you how it looks like. Interest rates are here already. The question is, how much higher does that go? And based on Powell's speech last Friday, that goes up a lot higher. If you look at Philippine bond yields, these have risen dramatically as well. So we have some bond funds. If you want like a safe income, low return income generating portfolio, there's no harm buying bonds now with yields this high. Which brings us to our interest rates is at 3.75%. Is 4% enough? Should it be 4.5%? With the peso weakening so much, should BSP Governor Medalla actually raise rates a lot higher than his previous forecast? So let's see, because they don't want the peso to be too weak, and raising interest rates is one way to arrest that. Now, I'm going to show you a couple of charts later, and these charts answer the question on, are rising interest rates bad for equities? And when I first presented this last year, I got a lot of flack for it because people did not like what I said. But as each month goes by and I showed the same chart, just updating it, people realized that, statistics were correct. And I'm not trying to guess here. What I did was I looked at 70 years of data for the US and 30 years of data for the Philippines. I wish I had more data for the Philippines, but the stock market was like dead prior to the 90s. So, 30 years basically is all I had. So I used 70 years for the US and 30 years for the Philippines. And I'll show you what it tells me. In orange is the US, in green is the US stock market, the S&P 500, in green are interest rates. And without going into the details, I'll tell you what conclusion number one is. Over the past 70 years of data, I'm only showing about 40 here, but over the past 70 years of data, there is no situation in an early rate hike cycle where the market goes up. None. Zero. And people were thinking, this year, this time, it's different. This time wasn't different. Batting average 100%. You see, that's from when I first presented this. Look at the S&P 500. Look at it now. And now I include in red the Philippines over the past 30 years. And you'll see it was just modeled by stuff like Asian financial crisis, our own political crisis. But by and large, when interest rates are going up initially, that's conclusion one. Pero nangyari na yun, tapos na yun. The market already fell. Which brings me to conclusion number two. You see markets moving up here already, moving up, moving up. If the economy can grow despite rising interest rates, despite tighter monetary policy, a new bull market will begin again. And that's what we should watch out for. When will that bull market start? Or possibly, has it actually started already? So the pushback I get is, the US actually hasn't entered the recession. Well, yes, and the chance of a recession, according to these firms, is anywhere between 30 to 50% over the next 12 months. But I want to highlight the thing with the market, it prices in news 12 months ahead of time. So this move here, I think this partially priced in a recession already. Has it fully priced it in? If it's a deep recession, no. If it's a shallow recession, I think so. Europe, though, is in a totally different position. It is really, really very bad there. They are in a recession already, one quarter ahead of schedule. This survey was done actually in April to May this year. They already sure they would have a recession in 4Q, except it happened in 3Q. So to conclude that part, rising interest rates and rising recession risk make navigating the investment landscape more difficult. But a bull market will begin again once growth resumes despite tightening monetary policy. So where does the stock market go from here? Where currently the stock market is not in good shape, but this is the opportunity. because stocks have fallen a lot and have gone nowhere in the past 5, 6 years, you are getting companies at very, very cheap valuations already. Each year it continues to get cheaper. And if you believe in the long-term trajectory of the Philippines, now is your opportunity to buy. COVID is done. Inflation has likely peaked. Yung kalaban na lang natin ngayon, weakening peso and how bad the recession abroad will be and what its impact on the Philippines is. But the two biggest bad news that's out of the way of it. Um, okay, I will go into the details of this, but basically, if the US does not have a recession, I think we bottomed in June already. That's the lowest point for the market. We may see corrections along the way, but I don't think it's going to break that low. If we have a deep recession, though, then that's a different matter. But we're using data here also going back about 70 years. But anyway, so just to show you the Philippines, our initial target of 7.4 was reached. The market hit a bottom at 6,054 and has since gone up 12% from that low. We think that unless there is a deep or prolonged recession, this low will no longer be broken. You may correct, you may fall, but unless there's a deep recession or the peso goes to like 60 pesos or something, this level is probably not going to get broken anymore. Unfortunately, the foreign funds are still selling. So they were buying for a bit in December and February, but they're back to selling again, although not as bad as it was last year. And if the foreign funds keep selling, the question is who's buying? And the buyers are the owners of the company. So I just want to show you here 2021 and first half 2022. Owners of companies such as the Ayalas, Andrew Tan, Gokong Wei, MVP, Ricky Razon, they've bought about 31 billion worth of their stocks already in the past 1.5 years. And Ayala bought another 12 billion, so this having 43 billion already. And they have about 40 plus billion of war chest left to go. So because their stocks have not gone anywhere in the past 5 years, the owners recognize that their stocks are very cheap. They know that they will now start growing from here, and therefore they'll be buying at very cheap valuation. So if the owners are buying this much at current prices, it begs the question, shouldn't we be buying too? Now, we don't have to buy as much as them, and we can space out our buying, but clearly, the owners have decided now is the time to buy our own stock. And we look at our forecast and we see that by and large, companies are going to grow their earnings this year, which, is a good thing. We're going to see weighted average growth of 19%. So what's our fair value for the PSEI? It's 7,350 for this year. Basically, we're saying the market goes back to the highs it saw last year. And at this valuation, the market is not expensive. This is just a fair valuation. The only question is 2-3 years from now, will we have a power crisis? Hopefully not. But in the near term, if inflation has peaked, I think 7,350 is a good fair value for the market by year end. So what are the catalysts for market to go up? I've listed 5 here. One has likely already happened, which is a peak in inflation. Second is the US market bottoming and going up. We have to understand the Philippines is a peripheral market. We are much smaller than the US. So a lot of markets, not just us, we tend to follow the move of the US stock market. And so far, it looks like it has bottomed, but the US is starting to fall again after Powell's speech last Friday. Again, we do not think the low will be broken unless there's a deep recession. So if there's more of a correction, I think those dips are an opportunity to buy. But I just put this in yellow in case there is a deep recession and we're wrong about the bottom. Now, the dollar peaking then weakening should have been a catalyst, except that it went the other direction. It went higher and caused the peso to weaken. So this is working against our stock market and it's a risk, especially for companies that borrowed a lot in dollars. So you have one good thing happening, you have one bad thing happening, then you have this somewhere in the middle. So to summarize, COVID will no longer be a major driver for domestic stocks moving forward. Global stocks initially corrected because of inflation, which was stoked by the Russia-Ukraine war. As inflation peaked, though, you had central banks now raising interest rates faster than expected, which caused the second wave of the correction. And this tightening cycle, while it's a short-term negative for equities in general, it will herald the start of a new bull market if growth can continue despite rising interest rates. The next thing that's happening now is rising recession risk. And the question now is 6, 12 months from now, in what form will the recession take and how long will it last? Now, and foreign funds have reduced Philippine holdings significantly. Now, some people make the argument that the market can go up without foreign funds. And I disagree with that. I think the market can stabilize without foreign funds. Just tayo-tayo lang domestics and Filipinos trading. But if you want to go to 9,000, if you want to go to new all-time highs, I really think we need the foreign funds to actually start buying Philippines. And when you saw foreign buying 3 weeks ago, 2 weeks ago, our market went up significantly. They're not buying as much now. On a year-to-date basis, it's still a sell. But you can see even a little foreign buying over 2 weeks can make our market go up 10%. Now, because the foreign funds are not buying, it's the local corporates and the owners who are buying back large amounts of their shares. And this tells us that they think their stocks are not only very cheap, but they have attractive growth prospects in the next 1, 2, 3 years. Otherwise, why would they buy their own stock? They should probably use the money for something else. But it's become so cheap and their stocks will grow that they've started buying. So what are the main risks to our forecast? Well, a Fed mistake, number one, or a potentially deep recession towards year end. Now, it's always good to be bear watching. As I said earlier, the market already fell because of all the factors I mentioned. A lot of the magnitude of the drop has already happened. So what we should be doing now is watching for the start of a new bull market. And that's where the big money is made. So with that, I end my presentation. Thank you very much.
Thank you for the very interesting and detailed presentation, Miguel. So we'll see him again later at our Q&A portion. So everyone, if you have any questions, please feel free to drop it in our chat box and Rampver representatives will take note of it. And now, syempre, we wouldn't let our events pass without hearing from Rampver's best. So for our next speaker, he is the lead independent director of two listed companies, Globe Telecom and Ayala Land Logistics Holdings Corporation, and an independent director of two other listed firms, Ayala Land and the National Reinsurance Corporation of the Philippines. He is also chairman of Singapore Life, a director of Esquire Financing, the Culinan Group, Technomarine Philippines, Seven Toll Trees Events Company, and Mobile Group Inc. He is a member of Brother Bo Sanchez's Mastermind Group and is cited by many as one of the best leadership, business strategy, investments, marketing, and sales speakers in the country today. He is the author of two books, Trailblazing Success and Firing on All Cylinders, which are both certified national bestsellers. Finally, he is the president and CEO of Rampver Financials. Friends, let us all welcome the Mr. Rex Mendoza. Hi, Boss Rex. Good afternoon.
Hi, Kim. Hi. Thank you for that wonderful introduction. First of all, let me thank all of you for being here. You know, it's a Friday afternoon event, and there's so many things to do on a Friday afternoon. But you elected to be with us, and that sends a very strong signal that somehow there is a bit of change in the way we perceive things. Second, I'd really like to thank Jenna and Miguel. You know, our partners from PhilEquity are not just supportive. No, it's really an all-out friendship. Miguel is right. I go a long, long way back. Wilson and I knew each other from the time he was, you know, a budding director at the PSE, and we were able to help each other out, not just in business, but in many, many personal matters. It's really a bit of gratitude if you're going to be looking at perspectives for me to check out what Miguel and Jenna would have done, because this is essentially what they do for their own clients and prospects at the Meralco Theater. Kulang na lang sabihin talagang di kampanilya po ang mga ito. And it's really heartwarming that they have allowed their participation in our event, and they've delivered essentially the kind of data, the kind of depth that not a lot of forums of this nature can actually give. So let me thank PhilEquity. Let me thank both of them, Miguel and Jenna, for their support for Rampver Financials and for our quest to bring Filipinos to the fulfillment of their financial dreams. Well, let me just share my slides. My presentation is actually geared towards a shift from crisis to opportunity. Many people have thought, after the COVID pandemic, we have new problems with the war, commodity prices have been increasing, inflation, and now, as Miguel said, fears of inflation. But as we look into that presentation of Miguel, if you notice it, if you're really very observant, we're now beginning to see what we call silver tints. Behind dark clouds, you now see silver tints, which probably wouldn't be as visible in 2020 and 2021. But that's not what this whole timing is all about. I'd like us to focus on this. It's really the bear months. And I'd like to say that, over and above looking forward to the songs of Jose Marichan, all of you have channeled your efforts to be part of our forum, looking at maybe financial wellness and responsibility within this next 4 months of BER. I would say this. The BER months usher in a very different time in the Philippine environmental setting. I think you'll all agree with me. During the BER months, we're going to be more festive, we're going to be more cheerful, we're going to be happier. And the inclination would really be to enjoy particular experiences and to channel very positive feelings of, again, joy and cheerfulness. But you see, there is such a thing as responsibility for the future. As we define financial wellness, it is security and the freedom of choice, not just today, but in the future. I think the call being made by Rampver Financials to all of you is to probably tweak a bit of our attitude towards our BER months and shifting it a little bit from enjoyment and happiness. I'm not saying totally eliminate that. That is us. We are Filipinos. But in a way, shift a little bit of that for our happiness and enjoyment for the future. So again, it's not just wellness today. It's wellness and happiness for the future. Because we're going to be getting Christmas bonuses. We're going to be getting a little more than expected, our 13th month. When you put that all together and you practically spend everything, then we're back to the grind for another year in January, hoping that we create resolutions to becoming more financially responsible and accountable. Never happens. It never happens. You don't have to wait for a new year to come up with money resolutions. The best money resolutions should happen in the BER months because your wherewithal to get into investment positions are always going to be best during the BER months. And Miguel has touched on all of these. A pandemic simmering down, high levels of inflation, interest rate hikes, which continues. And I guess that's a real problem why the market started plummeting again. And lastly, because we're not at par with the increases that the Fed has made, we're now seeing a further weakening of the peso. This morning, we were looking at 56.60 to 56.65. After correcting to below 56, we're back to the high, mid 56, and maybe if we're not going to follow suit, we might even be seeing a 57 to a 57.50. We are investors. We know what we're up against. And we also know attitudinally and behaviorally, hey, it's a great opportunity. As those silver tints show up, it might be the time to invest. And Warren Buffett said this: be fearful when others are greedy and be greedy when others are fearful. Actually, we all know this, easier said than done. When everyone's fearful, you become fearful. And when everyone's greedy, it's so easy to get greedy as well. The roller coaster of emotions in investments, stock market trading is real. Normally, we lace it with our own storylines, market's going up. I want to be part of it. It's great. I come in. I buy. It goes further up. You see, I made the right decision. It starts going down. Oh, this is an opportunity. I'll buy more. Then it goes down further. And as it goes down further, little by little, things chip into your level of confidence to the point that you're going to be pushed towards capitulation and despondency. Ayaw ko na to. I'm out. This is such a mistake. And when you do that, markets climb a bit and you're going to say, that will go down again. And true enough, it goes down again. But when it goes up, there comes a time when it continuously goes up. By that time, we're now again scared of getting left behind. So we again join the bandwagon as the level of market confidence becomes positive. Why is that happening? We all know what to do. We don't do it. It's because of one main thing. It is commitment. We have to be able to commit to our investments, to do the right things, because whatever is in that environment, they will shake you. They will make you rethink your position. And I've said this many times, we're now living in what we call a VUCA world. It's a VUCA world. And quite frankly, management and optimization of investments have become more difficult and challenging because things would have been more volatile. There are rapid, unexpected changes all the time. The black swans that we know, they don't seem black anymore. They just happen one after the other. There is such a thing as uncertainty. We know that there are unknowns, but that has been stretched to ambiguity. This is tougher because in ambiguity, we don't even know what we don't know. And they impact markets, they impact investment performance, and before we can respond, things can be too late. And obviously, things are becoming more complex. There are key decision factors. There was a time when we only have a few variables. Today, there are multiple variables to consider. I go back to my book in Economics 101. In Economics 101, certainly, once you say the interest rate goes up, equities go down. Miguel would have said that. That's a typical rule. However, other factors like economic movements and fundamentals like recession, interest rates, exchange rates, that kind of complicates matters because we cannot be an independent market anymore. We're now part of a region. And on top of that, that region is part of the world. That brings in several new considerations that makes it more complex. And I agree, our market will not fly without foreign investors. But foreign investors have other options. They can go elsewhere. and they can have a whole sift through of other markets before they come back to us, because they're seeing probably greater amounts of optimization in other markets. So as we see this, do we become, frustrated, disappointed, and should we shun the market in full? Just avoid it? The answer is no. The answer is no. We will have to match up volatility with vision. What's your vision for your investment portfolio? What are you doing this for? What are your goals? No matter how volatile markets are, we want to realize goals. We want to have a luxurious retirement. We like to educate our children better. Your vision will guide you through the volatility of markets. On top of uncertainty, you have to have understanding. And that's the reason why you attend forums like this. Can you just imagine how many investors or budding investors are there who are not even attending sessions like this? While it's given for free and you have access to the likes of Jenna and Miguel just like that? How come they're not here? Because they're not understanding markets. They are acting without appreciating. With ambiguity, we match up with agility. We have to have the flexibility to move. And that's the reason why in Rampver, we give you several options. There are waves and waves of openness towards real asset allocation, involving markets, involving different investment vehicles, and even horizons are differentiated. And lastly, and obviously with complexity, we'd like to match up with clarity. We will have to do all of these things because the challenges, as I've mentioned, would be all around us. There are a lot of complications. There is a volatility of both local and global markets. But let me tell you, the bigger problem is this. It's attitude, culture, and behavior. Because no matter what's happening outside, if you manage yourself better, you will always do well. I have yet to fathom and understand why people try to manage economies. That's the job of politicians and economic managers. You're not supposed to dabble into the economy. Your economy should not be the same as the Philippine economy. For your own sake, for the sake of your loved ones and the fulfillment of your goals, your economy will have to be a different economy, which means you have to maneuver whatever is happening to be able to fulfill your financial dreams. Your behavior is more important. Why? Because you have to manage the controllable. And what is controllable? Yourself. You cannot manage something you cannot control. And once we see that we're dabbling into things that we cannot control, like the economy, it becomes a futile, disappointing, and frustrating exercise. So clearly, we have to be able to do that. So what are the must-dos in times of uncertainty? We have to understand the situation. That's why Rampver is coming up with sessions like these to make us understand and appreciate what's happening. To make us realize that, hey, if this factor input behaves this way, then the market can go that way. We can expect certain movements to happen, and we can reasonably and in a more educated way predict how markets are going to move. Analyze before reacting. How many people would have sold because the bandwagon is selling? Because people are selling, they sell. Because people are buying, they buy. Because people are buying this, they buy the same thing. You have to analyze before reacting. And mind you, there are times when reacting before analyzing can be fatal for investing. Be mindful of perspectives. Think about your goals. Because your goals are finite. Your child's going to study in X number of years. You are going to retire in X number of years. You're not supposed to make that elective. Can you imagine how bad it can be when you plan to retire at 60 or 65? And when that time comes, you don't have the capability to do so? How tough is that going to be? That you have to extend your working life doing something that you might not like doing. It's even good if you like what you're doing. But what if you don't? There is a big difference between an emancipated person where cash flows are finite and fixed no matter what's happening. So they actually don't need a job. They have an emancipation fund, or for the like of the real people there who don't mind, it's actually FU money. You can walk away from doing something you don't like doing because you have money and cash flow coming in. How are you prepared for that time? And when that time comes, the age target that you have, will you really be emancipated? You have to plan for that. Today's life cycle has extended. There was a time when people say, we live to 75. Today, the expectation is 90 to 100. Our generation. The younger generation can even be higher than that. People like Tony Robbins would now be talking about 120, 130. If you start working 21 and you end up working or stopping that workflow by age 60, you should have enough money to live another 30 to 40 years without working. Are you ready for that? Did you have the financial accountability to be ready for that? Your money has to work for you, or else you will work until the day you die. That is the issue here. And on top of that, you might get to work at a time when you don't have to, because you have to. So think about it. Stay the course no matter what's happening to your investments. Sometimes longer term strategies take time to be effective. And that's why I like Jana's charts. She showed how long it has been from the 90s to today, how their funds have performed. Because people are looking at the last 2 to 3 years. Investments are not graded and measured in terms of performance in 3 to 5 years. That's not the horizon. You really want to be focused on the way this works. You have to accept that you have to look at the long haul. This is a long game. This is not going to be a short game. So clearly, by knowing what you should do, where you're headed, you will behave correctly. So move to execute correctly. Is there so many alternatives out there? But again, you all know, Rampver will not put questionable fund managers in a forum for you. We only invite the best of the best. And that's the reason why we're here. Hindi kami mapapahiya sa mga fund managers na ito. And why? Because we've been part of that. Sometimes the real risk is missing opportunities. And that's the reason why I introduce this here. For the bear months, can we start our move towards a simplistic strategy called peso cost averaging? Peso cost averaging is a strategy. It is investing a fixed amount in a pre-selected investment instrument in regular periods or intervals. Very important, 3 items. Fixed amount, pre-selected investment vehicle, periodic terms or periods. Alam nyo, this is the way to go. And we know it works, especially for PhilEquity. I have shared this many times. We have a client, a bus driver who became a millionaire, investing 1,000 a month. At best, 2,000 to 3,000 during December, when they earn a little bit higher. With minimums that are like that now, there is no excuse not to be an investor. But this bus driver started in the 90s. Do you know PhilEquity's NAVPS in the 90s? It was 1 to 3 pesos. The market is down today and it is 30 pesos. When can you earn that? What bank will give you that kind of return? 1 peso to 2 pesos, nagiging 30 pesos. So the 1,000 a month, the 3,000 every December, ended up making him a millionaire before the pandemic. So hindi po haka-haka ito. Nangyari na eh. Meron ng showcase eh. Right? And let me tell you why it works, why this works, and why we're recommending it all to you using PhilEquity's funds. Or it cannot be even one fund. If you have a little more money, we can cut it across 2 to 3 funds that Jana presented. Why does it work? Number one, easy execution. You don't need to study the market. You need to study yourself. Magkano perang kaya mo? Ilan beses sa isang buwan ka maglalagay? Quincenas ba? Or every end of the month? Because the analysis, the depth of study, markets, that's Miguel's purview. Trabaho nila Miguel yan. Give them the job. Let them do the work. Why will you have to do that? I mean, look at the charts that Miguel showed us, Jenna showed us, in a span of about, what? Less than an hour. Tingnan nyo yung mga graph na yun. Yun ba yung gusto nyong gawin? Or do you want to do what you do best and just give them the money so that they can grow it over time? Easy execution. You don't manage economies, you manage yourself. Second, and very important, it sets forth discipline. Natatanggal mo sa kinikita mo yung pang savings and investments. Immediately, you don't hold it, you don't touch it, it will grow for you. Discipline is always an anchor in successful investing. Number three, money is deployed and optimally works for you. Diretso eh. After you receive it, you give it to the investment manager, to the fund manager. Deployed agad. Why? What happens when we don't deploy? O ipapark mo muna. Paakyat yung market, park muna natin. Bangko muna. Microscopic interest. Then yung market, umakyat na lalo. Hindi mo na mailagay. Yung parking niya, naging long-term parking na. And because of inflation, you get erosion of value. When it's immediately invested in periodic amounts of time, the deployment of your money is optimized. Your money will work for you. Money is the best employee. Works 24 hours a day without complaining. That's very important. And lastly, pero ito yung pinakatuktok, ito yung talagang pinaka-importanting factor. Why peso cost averaging works, especially for Filipino investors. You take emotions out of it. We are very emotional people. And in our investments, it really does get in the way. I tell a lot of people, the human organ that's most important in investing is not the heart, it's not the brain, it's the tummy. Patigasan po ng sikmura dito. So kung emotional ka, maiiwan ka. So peso cost averaging takes out the impact of emotions because you're just putting it in a methodical way, in an organized way. I want to end with this slide. And it's a statement made by, again, who else but Warren Buffett. Maybe one of the least popular lines that he says, but as far as I'm concerned, one of the most important ones. Cash combined with courage at a time of crisis is priceless. If you're able to set aside the money, please naman po, yung ating Christmas bonus, let us make it work for us. Karamihan kasi, September, October pa lang, ubos na yung Christmas bonus eh. Nautang na. Diba? So let us make sure we have the cash and we have the courage. Kasi yung iba naman, may cash din, pero mahina ang loob. Hindi alam kung paano i-deploy. And they don't know how to make money work for them. And when that happens, there would be a least functional way for the money to earn and grow. So please, the BER months usher times of cheer and joy. Let us make sure that that happiness doesn't stay for 4 months. That happiness should be long-term. And when you're looking forward to long-term happiness, fleeting factors of blips of interest rates of performance, they won't matter. Alam niyo po, investment instruments come and go. But organizations like PhilEquity and hopefully Rampver would be there by your side to make it happen for you. Because we're not all about instruments and investment vehicles. It's a bunch of people with a real mission to do the best for you, to do the best for your money, and to make sure you're fulfilling your financial dreams. Thank you so much, and good afternoon once again.
Thank you very much, Boss Rex. Grabe, amazing talk as always. And I'm continue learning every time you have this session with us. So friends, don't let this opportunity pass. As Boss Rex would always say, education without execution is just entertainment. And now you have reached one of the most exciting parts of the event, the Q&A portion. So at this point, may we request our guest speakers to please open your videos as we now move on to our question and answer portion. And as mentioned earlier, we have chosen the most interesting questions in our chat box. So this will all be answered live by our speakers. So to start our Q&A session, this question is for Miguel. So the question is, do you agree with the reports that we already reached the peak of our inflation? And how does it compare with other neighboring countries?
Okay, good afternoon, everyone. I think our inflation has very likely peaked. If not in July, it'll be in August. It depends per country. So, for example, you can imagine the Asian countries probably have inflation are about the same situation as us in terms of trend. But if you look at, say, the US and Europe, it is a different matter there. Europe's in a particularly bad place. I don't actually know when inflation peaks there. Like UK probably hit 20% this year. I told you that anecdote in my presentation. Electricity bill ng kaibigan ko, 6 times ng electricity bill sa Pilipinas. 6 times! I know how bad that is. It is legit. I mean, I chatted him. It's that bad. So yeah, we're probably par with our Asian peers, but worse off than those who make their own commodities. But we're better off than US and Europe by a wide margin.
Okay. And additional to that, no, this is actually from the same person. So with the current conflicts with the Taiwan and China, Russia and Ukraine, so do you see any direct effects on our supply chain, import and then export?
Well, there was initially, and I think markets have adjusted to us. Europe again is a different matter, but the Philippines has largely adjusted to Russia and Ukraine. There are still some bottlenecks here and there, but their adjustments have been made. It's a bit more expensive to import though. Taiwan and China in its current state, I don't see a problem. If it actually becomes a real war and not just a cold war or posturing, I mean, yeah, I don't know, man. But let's hope not.
Thank you. Thank you for that, Miguel. And then for next question, this one naman is for Jenna. So the question is, since we're talking about like both local and the global funds, so do you have any plans for a multi-asset or feeder or foreign funds under PEMI moving forward?
Okay, thank you for that question. No? So to be honest, as of current, we don't have it yet in our pipeline. But with that naman, we will announce it already in our website once we have it already. And we will closely coordinate with Rampver to tell all our clients. Thank you.
Thank you, Jenna. And then additional, no, since a lot of clients are already interested to invest in PEMI, so how can PEMI help our current clients and investors in ease of doing business? No, so do you have any plans in shifting from the traditional process that we have to digital later on, or to like online process later on? Yeah.
Okay, thank you, Kim, for that, and thank you for that question. So for first of all, we understand the sentiments of our clients with regards to ease of investment, most especially during the times of pandemic. So first of all, for all our existing clients, what we encourage is for you to update your account because we do have this online facility or e-facility wherein you can just send your forms through email plus the proof of deposit. But aside from that, we also have the auto deduct facility. So our partnered banks is under BDO and BPI, wherein it's just a one-time form. So there's a PEMI form and also a bank form that you need to accomplish. Then every month you can just select if it's every first or 16th of the month. It will be automatically deducted to your account. So we can also apply Sir Rex recommendation about the peso cost averaging, which we highly encourage that you do that. So you can do that on a monthly basis or quarterly basis on a long-term investment. Thank you.
Thank you for that, Jenna.
Kim,
Yes,
I'd
po.
also like to mention, no, might be worth mentioning it now. We're going to be launching publicly Rampver online soon, no? And one of the highlighted fund managers would be PhilEquity. So we can make people invest seamlessly, simpler in terms of documentary requirements. So I guess people should look forward to that. That's going to be coming up soon.
Thank you. Thank you for that, Boss Rex. And for sure, our clients are looking forward to this Rampver online. And actually, the next question, Boss, this one's for you. So since a lot of people are more or less no maraming pera during BER months. So with this question, is our country, Philippines, still considered as a sweet spot in investment destination in the region?
I guess that's going to be debatable. A lot of foreign fund managers are not seeing that, so they're looking at other countries ahead of us. But if you're going to be particularly focusing on our own Taipans, no, because again, I always mention I'd rather not fight the big boys but join the big boys. And as you see, Miguel's presentation on the families, the big families in the country, buying their own companies, buying their own stocks, why don't we join them? I'm so sure they know better than us, right? In terms of the way they're performing, in terms of the way they're valuing themselves. So they know they're practically undervalued. So it might be a good chance for them to pick up their own shares at a deep discount. So we also should be able to follow suit. Now, the foreign fund managers, let me be clear about this. They have options kasi. I mean, we're not the only game in town. There are other places to go to. So think about it as a cycle. So syempre unahin nila where the optimism abounds, but eventually they will see us. We might not be top of the list today, but it can happen sometime soon.
Thank you. Thank you for that, Boss Rex. And since we're talking about our fund managers, now I think this question best fit to Miguel. So the question is, yeah. So what do you think are the best investment strategies now that we have officially entered the BER months? So are we seeing a Santa Claus rally till the end of 2022?
Okay, generally there is a Santa Claus rally, not all the time, but I'll give you guys a bonus. I have not shown this in public, Excel ko to. Rex
Wow.
Mendoza might want to see this also. Okay. I don't include this in presentations except the board meeting namin, but I'll show you to answer your question. Okay, yeah. Yung picture to. This is the Excel. So here we actually have mathematical stuff on seasonality, ghost month, January effect, Santa Claus, and all that. So we know what's real and what's not. So I'll just show you the answer here. The best time to buy the market when we looked at data since EDSA revolution is actually Halloween to Valentine's. The average return on a full year for the Philippines is 12%. Halloween to Valentine's, the average return is 9%. In other words, 3/4 of the market's annual return just happens in 3.5 months. Yan, hindi ko siya sama sa
Guys, this is such a
presentation.
bonus. This is what I like about Miguel and PhilEquity. They hindi haka-haka, they're always supported by data. And whenever they make certain statements, they back it up. I think that's what I like about you guys. I mean, and it's not emotional. There are numbers that they show, right?
That's our trade secret. That's why we don't show that. But what I think Rex Mendoza and you guys might find it interesting. That's the first time I've shown that, I think, I don't know, in 6, 7 years. Because when I joined Mr. C, we worked on this for 2 years, 3 years. So we checked everything. So I did it myself, and my assistant, very good at math, we did it. We checked all the myths in the market, and we realized that that no one was looking at this particular peer, puro Ghostman, Santa Claus Rally, January effect. This one walang tumingin nito eh. So yeah, just want to and we update it every year, right? Just to see if it works. And so far, it's still working. For example, if you look at the 2021 cycle, the full year was down 0.2. Halloween to Valentine's was up 1.8. If you look at the COVID year, market was down 8.6. Halloween to Valentine's plus 9.
Thank you for that. Great bonus, Miguel. So I think for those people no nakakaintindi ng mga numbers na ganyan, like they really appreciate that. So, and again, thank you so much, Miguel. So now we jump to the next question. This one naman is for Jenna. So given with the uncertainties no and volatility nga ng market natin in the last few years, and then of course on the next months no, in the next coming months, so would it be best to stick to index fund or ETF instead of funds like PhilEquity fund or dividend yield fund or alpha? So again, no, would it be best to stick to index fund or ETFs instead of funds like PhilEquity fund, dividend or alpha?
Okay, thank you.
Okay.
Yeah, go ahead, Kim.
Okay,
All right. Thank you again for that question. So the presentation that I had earlier is actually our top 3 funds. So in suggestion as well for our clients, but this will always depend on your risk tolerance. So this is more of the aggressive type. So what we are recommending is the dividend yield fund, the PhilEquity Alpha 1 or the PhilEquity fund. So if you want to have something defensive and resilient during when the market is down, you can go dividend yield fund. But if you're more of the aggressive type, then we will suggest the PhilEquity Alpha 1 fund. But if you want to be somewhere in between the two, then that will be PhilEquity fund.
Yeah.
Thank you.
So thank you very much, Jenna. So I think that answers the question as well no, of one of our client na kung meron daw ba plan magbigay ng fund which is moderate type of plans naman or moderate type of fund. So I think yeah. So for our client that ask that question, so you can choose PhilEquity fund. No? And again, thank you very much, Jenna. Yeah. So again, for next question, this one naman is for Boss Rex. So the question is, a Philippine peso sank to a near 18-year low against the dollar yesterday to 56.42. Is this alarming at all or a must to boost for exports?
You really like alarming? Do you know how it closed today? It closed at 56.77. So again, that's another jump, right? And as I've said, it's also because of the dynamics between the Fed and the BSP. And Miguel is right. I mean, we're not like the Fed. They're already teetering towards recession. They already had a quarter that's negative, right? The good thing for us is that we don't have that. We're still posting an 8. So if you're going to be looking at the risks for a recession, it's going to be farther down the road for us at the very least. So we're not going to be as defensive against inflation as they are. Why? Because, again, think about it. This is a new administration. You don't want to put a clamp towards growth because that's going to be a political issue. you'd like people to feel good that they elected you as a president. So you don't, in fact, you should be spending more so that people feel the growth. So I would see government spending to be pushing the GDP much better than it did in the past, especially in the time when we're like not borrowing as much and stuff like that. So I guess clearly for me, I agree with what's happening. I agree with the economic managers for as long as it's under control, not wayward. But again, I'd like to take this opportunity to answer the questions for Jenna. Jenna, sorry, pero talagang I really like to do this. No, I'm not fond of index funds. Okay, I know many of our viewers read books and go through YouTube channels of foreign investment gurus or foreign investment advisors. If we're in New York, I will agree with you. Index funds are good because not a lot of fund managers beat the index. They have a very, very efficient market. The Philippines is not an efficient market. You have less than 300 actively listed stocks. So the big boys can do more of their magic because the market's not efficient. If you look at sa akin, the answer I'll have to that, Jenna, pakita ko lang yung chart ng PhilEquity fund eh. Nasaan yung index, nasaan yung PhilEquity fund? That difference is value. You lose that value by investing in an index fund. Right? So I'd rather invest, kasi ako pa, I don't invest in financial instruments. I invest in the people behind them.
Mhm.
So when I invest in the index, there's no person behind it. It's a computation of the basket. If I go to PhilEquity, I have Wilson C. I have Miguel Agarao. I am betting on people handling the money for me. So how can you go wrong with that? Yes, I pay fees, but look at the difference. They cover for the fees they charge. And I'd rather do that while sitting pretty, making them grow my money. That is the way to do this, right? Second question. Sorry, yung moderate fund. You don't need to launch a balanced fund. You know what you need to do? If you need a balanced exposure, meron ding bond fund si PhilEquity. So kuha ka ng 50% na bond fund niya and then kuha ka ng 50%. May balanced fund ka na. Right? So you don't even have to have a balanced fund to have a balanced portfolio. Any investor can balance that portfolio with a combination of two funds. Thank you.
Thank you. Thank you for that, Boss Rex. I agree, no, na if you can choose both, you can invest in both, you can have bond fund and an equity fund. And given for those people who are in a way conservative enough na hindi nila alam which fund really to choose in investing. So we have this question. This one is for Jenna again. So what are the advantages in PhilEquity funds no, over the Pag-ibig MP2? So will the fund work on short positions if PSE will eventually approve it?
Okay, thank you again for that question. So, like what Mr. Rex said a while ago, no, for mutual fund, this is not a short-term type of investment. This is really for a long-term investment. So, we don't recommend that you compare it on a short-term basis, but you can see that PhilEquity fund, it's over 28 years already. So that's our flagship. So yung return niya will give you around 12% per annum. So that's an average per year already. So you can compare that as well with other instrument. If it gives you around that much, if it will give you around 12 to 13% per annum. So still, I would recommend if you're looking for somewhere that you want it not too aggressive or not too defensive, you can go for PhilEquity fund. Thank you.
Thank you. Thank you very much, Jenna. And down to our last three questions. So this one is for Sir Miguel. So I have been investing in PhilEquity for several years now. So do you have any plans to have an app so that I can monitor my investment easier? Actually, this one's for Jenna pala. So do you have any plans to have an app so that I can monitor my investments easier?
Okay, thank you again for that question. What we have on our pipeline will be an online portal, but
Okay.
we will further discuss this with Rampver and we'll surely announce it on our website as well. Thank you.
Thank you very much, Jenna. So mga wala pa pong funds kay PhilEquity, kay Rampver Online. Joke lang. But for those who are invested already in PhilEquity, like we can really surely wait for that online portal. And again, thank you very much, Jenna, for giving excitement to all our existing PhilEquity clients. So ito naman, Boss Rex, this one's actually for you. So it's not more on a question, but it's like a statement. And we want to get something like from you, your take from this one. So sabi niya, the post-pandemic seems to reflect what you are saying about the culture and attitude of many Filipinos today on investment. Kailan kaya tayo matututo na hindi tayo masyado umaasa sa gobyerno?
We have to realize that that's already a reality for many of us. No? Many Filipinos who don't rely on government actually do a lot better because government can help, but it is not going to really work if you're too dependent on government. In fact, it's going to be very disappointing, right? And then you're just going to be looking at other countries, checking out other opportunities, and before you know it, there is going to be some frustration, disappointment, and learned helplessness. Real thrust towards prosperity and abundance is accountability. The buck stops with you. You have to do something about it. The government, if it helps, fine. But you're not supposed to be dependent on it because, your loved ones are going to be looking up to you to be the one to provide. You cannot pass on that accountability to someone else. Thank you.
Thank you. Thank you very much for that, Boss Rex. And last two questions, this one for Miguel. Do you have any PhilEquity fund that's like an ETF naman daw?
Well, ETFs are essentially like passive funds. That would be the index fund, which Rex Mendoza hates. But it's not tradable like an ETF. It's like an ETF kasi can buy and sell it like a stock. So we don't have that. But an index fund in terms of return profile would be the same.
Okay. And then additional niya, what is the difference between PhilEquity fund versus FMETF naman?
FMETF is a passive fund. It's like an index fund. So it just copies the index. You can like trade it like a stock.
Mm-hmm.
So that was like first Metro's pet project before. Tas walang sumunod eh. So yeah. I won't say why, but yeah.
Okay. For last question for Miguel. So what are the drivers that you are thinking that would drive the market for the last 3 months or for the rest of 2022?
That's tough because I'll be honest with you, when I was talking with Mr. C, okay na yung market but Powell's speech last Friday really makes everyone reassess their economic outlook and market outlook. So outside of season, and what we have going for us is a peak in inflation and good seasonality. But again, on the seasonality, these are statistics. These have no reasons behind them, and they're not 100% foolproof. So if you have something like the peso suddenly weakening a lot, that's gonna be like the 20% chance that statistic fails. So I see a better second half 2023 actually. It's like what we thought would be good got moved a bit. So window of buying increases. It's now a longer duration. And you may be able to get stuff at cheaper prices.
Thank you. Thank you for that. And last question for Jenna. Okay. So, here. So, is it okay daw ba to invest into, or is it recommendable to invest into different type of plans? So, parang yung plan niya, meron siyang different goal, and bawat goal na yon meron corresponding fund. Is it okay daw ba na ganon, or better to stick to a specific fund na lang and focus on that?
Okay, thank you again for that question. So like Also, I want to add lang doon sa sinabi ni Sir Rex. Because PhilEquity, we don't have a balance fund. But if you want to have a balance fund, you can actually combine. And yes, you can do that. You can combine different PhilEquity funds depending on your goal. Like just to share, for me, I do have different funds as well in PhilEquity because I do have different goals for each as well. So my recommendation, yes, you can combine. If you're looking for a balance type, then if your risk profile is also a balanced type of investor, you can divide that as well. You can open a peso, then you can bond fund, and you can open an equity fund. But if you want more of the aggressive type of investment, then you can combine the top three that I discussed. So again, that's dividend yield, the Phil Equity Alpha, and also the Phil Equity Fund. Thank you.
Thank you. Thank you for that, Jenna. Last question. This one's for Boss Rex. So, any advice if I have a substantial investable funds now? Invest by lump sum or still wait and see a clear path to recovery first?
I wouldn't really bet big at this time. I'd rather spread it out, and for good reason. Um, as Miguel mentioned, there are still certain things that are, somehow tilting the balance as to market direction. I'm sure this impact on the exchange rate will be felt in the market by tomorrow and the week ahead, right? Because certainly there would be companies that would have dollar loans. There are also companies that don't exactly earn dollar revenues but have dollar expenses. So there would be an impact for those things. But I guess the important thing is this, that the attitude shouldn't be one time, big time. So it's really a function of asset allocation. I have to have emergency funds. I have to have some fixed placements so that when something wrong happens, I don't need to sell my portfolio. I can continue growing my portfolio and buying at bargains. So I guess that's the answer that I'll have. I'll put substantially if I have a big amount, but I have to make sure that I can still continue that discipline moving forward. It's not a one-time thing.
Thank you. Thank you for that, Boss Rex. And so before we close our program, may we please get some final words or any message again from Boss Rex, Miguel, and Jenna? I think Jenna can go first, Miguel, and then last Boss Rex.
Okay, thank you. So again, for all our investors, your best ally is really time in any kinds of investment. So we see opportunities in crisis. So take advantage while the market is still inexpensive. So you may start investing or adding on your investments. Thank you.
Thank you, Jenna. Miguel?
A lot of emphasis has been given to trying to time when to put in your money. Is now the bottom. Like, do I put it in October, January, Valentine's? Do I put my marriage money in there? Stuff like that. But they take it from what Mr. C said, when what Bex Mendoza said. More important than timing the market is time in the market. How much time your money actually spends invested. So when's the time to invest? You invest now, whether you do it in a lump, whether you do peso cost averaging. The point is you need to start investing already so your money can start working for you. Thank you very much.
Thank you. Thank you, Miguel. Boss?
For me, I think everything's been said. So my real last message is thank you. Thank you to everyone who attended our forum. Really grateful for your presence. And again, also very grateful to PhilEquity, to Jenna and Miguel for being here with us. Again, it shows the friendship, it shows the support. And I know with them and together with them, we are in the best position to handhold all of our clients, all of our prospects, and make sure they are firmly on the pathway to achieving financial security and prosperity. Maraming salamat po, and have a very relaxing, fun weekend ahead. Thank you.
Thank you very much, Boss Rex. And again, friends, as much as we would like to accommodate and answer all the remaining questions, I'm afraid we might not have enough time for that anymore. So please just expect your BDOs to get in touch with you to help answer your inquiries. Thank you very much again to our dear speakers, Jenna, Miguel, and Boss Rex. So we do hope you enjoyed and had a great time today. Thank you again to our sponsors, Rampver Financials and PhilEquity Management Inc. for making this event possible. And of course, thank you very much to all our dear attendees for making us a part of your day. Please don't forget to subscribe to our YouTube and TikTok channels, Rampver Financials, and we look forward to seeing you all again in our future events. With that, this is Kim Saeo saying thank you very much, stay safe, and may God bless us all. Ingat, everyone!
Rampver envisions itself to be the leading financial intermediary, advisory, training, and consulting team that provides access to the best organizations, products, and services, offering strategies and unbiased solutions for wealth management with exceptional services that exceed clients' expectations. Rampver Financial's humble mission is to help people fulfill financial dreams. It offers a unique and complete platform of financial services which comprehensively matches any individual or institution's financial goals through mutual funds, life and non-life insurance, healthcare, and other financial services, complemented by an effective financial literacy platform and supported by reputable local and global partners. Rampver Financials has placed itself at the forefront of the Philippine financial services industry. Rampver Financials commits to continue learning as much as we guide, to listen as much as we coach, to work as much as we dream. It is time to make Rampver Financials your partner in wealth creation. Rampver Financials, helping people fulfill financial dreams.